I thought we had some music playing. We don't. Good morning, everybody. This is Jordan with Conquer Trading and Investing. We're going to be getting started here early this morning. Before we do, let me try to get a sound check really quick. Sound check 1 2 1 2. All right, everyone. We got the sound. I'm going to keep going over here. Listen, this is going to be a short and powerful session. What I mean by powerful, I mean we're just going to get right into it. I'm not going to be able to wait this morning for everyone to get into the room to be able to greet you all. One of the favorite parts of my day. So listen, really, I'm just sending, a greetings to everyone. A good morning to everyone. Hope everyone is doing well. We're going to focus here on the charts here, just make sure that everyone has some type of clarity going into today's session. And then after that, I'm going to go ahead and get these IT guys back over here and try to sort this out for tomorrow's session and for this afternoon's update. So that's what we're going to focus in on over here. I tried to go to Zoom this morning because the latency was so low over here this morning. We're going to work with what we have. All right, so markets are mixed right now as I come into the session over here, right? We had some leaked data, by the way, some way better than expected Chicago PMIs coming in at 62.4. It's not confirmed yet. It is on the calendars and it's across the calendars, but this data was not supposed to be coming out just yet. And the markets did react off of it, okay? We had also final GDP. I don't think this is important over here. Why I don't think it's important is because we're looking to the third quarter, which is actually, from what I understand, actually supposed to be plus 30%, right? Market's always forward-looking mechanism anyway. And then we had the ADP non-farm employment change adding more than expected. But at the same time, you could see Disney just laid off 20,000 workers. As well as multiple other companies at the end of the quarter have laid off additional workers. Tomorrow, by the way, we have two big events the rest of the week. We have the ISM manufacturing PMI tomorrow, and then we have non-farm payrolls on Friday. Let's do what we do best. Let's see what's going on in the charts, and we're going to start here with the S&P 500. What I want you to notice here, right, we all know we were rejected right into that resistance. And then since after the election, right? After the election, you saw after the debate and during the debate, you saw the futures rising. And then as soon as the debate ended, they fell. And we see probably some stops taken out on the upside and the downside, but we've stayed between our channel, our resistance, our support. So we have, what we're watching is descending breakout. Let me go ahead and put my cursor up. Descending breakout into the resistance, now pull back, and now we're resuming out this morning. We haven't made a higher high yet during London, but we're about to, or it looks like we're about to, just a couple of points away. That high in overnight came in around 33.44. We're just trading 2 points off of that. That gives a very solid entry, in my opinion. Now we're going to look at the Nasdaq and look at the Dow and see which is offering the best. But this gives a very solid entry over here after so far the breakout of this descending wedge playing out perfectly. Breakout, pullback, and now getting set to resume off. Let's check out what we have going on the Nasdaq. The Nasdaq held the prime trend line. I'm going to zoom out right over here, and you can see the prime trend line we were watching over here. We said as long as we hold above that and resume off of it, it looks good. And now it's not going to give an entry over here because this is a big wick, right? You can see that huge wick. And by the way, notice this happened overnight during the election. Price came right exactly into our upper trend line of resistance right over there, our channel resistance right over there. It peaked right into it, came all the way off, back into the support, and now is resuming off. We're still waiting for an entry on this right now to clear above this resistance, this channel resistance over here. That then will open up some upside entries if it does occur. So S&P is looking good. Nasdaq is definitely wait and see. And here we have the Dow, and what you see on the Dow is also going to be wait and see. But we see what happens is we broke out of the channel, came in and retesting it, and now potentially, not yet, potentially are getting ready to go ahead and resume off that. So of the three, definitely the S&P is looking like the best lead of the bunch. Now, we have about 25 minutes to the US markets open. There's a lot of trading ahead of us. We'll see whether or not we get that signal on the S&P 500, and we'll see if the Nasdaq and Dow are able to follow suit. On the DXY over here, look at this. This is actually some beautiful trading happening over here, meaning the trend line we were watching yesterday. Remember we said it's not just 94, it's the trend line below it. And you can see that was all resistance and now is held so far as support. We're bouncing up, but look how far we bounced. Follow my mouse over to the left, right over here. We just came into local resistance so far, right? Which means really for the dollar to look like that, it is extending out of this. It's still got a little work to do. Right now, it has the potential to go either which way. It could either continue rising over here, get above that local resistance. I would say around 94.30, it's cleared. However, it could still roll over back over here, come back down and take out the overnight low. So it's kind of, well, it's very much in no man's land here. I can't tell if we're resuming off of this support or if it's still in a little bit of jeopardy. Too soon to tell. Not a lot of clarity over there. However, let's check in what's going on with gold right now. Gold, also, again, everything's trading right now very technically almost perfect. Why do I say that? You could see the rejection, right? The rejection, but right into support. It touched the area of support and is still bouncing off and consolidating. This kind of makes life easier, right? Because this is now giving a very clear trade. Now, I am waiting here personally, everyone following knows, to see if we regain 1904, above 1904 resistance. We've regained the bullish structure here on gold. And at that point, I'll be looking to reestablish some paper positions. If we lose the support over here, right, that gives a clear sell signal. It gives a clear sell signal. However, I'm not taking the signal. I'm not going to short gold, but we will continue to follow and what's happening right now. Definitely, it has more of that negative bias to it until it regains 1904. However, it is neutral between resistance and support. And that's the whole, that seems to be the whole market this morning so far. Let's see what's happening over here with silver. Silver, pretty much the same thing. You can see between resistance and support, it is neutral. You got a clear signal below this support over here, reestablishing the breakdown, the retest, and that would be the signal, I think, coming out of the retest over there. Notice we held off. And again, I'm not selling silver over here, but that's just what's happening over there as far as those who are looking to pick up some trades. And above 24.50, this becomes bullish again. Clear read on everything except it's a lot of sitting on hands. Bitcoin, again, under pressure. I'm seeing over here a series of lower highs, which I don't like, not very nice, lower highs over there. But at the same time, it's holding that 10,570 area of support over there. And so probably this is probably the way to go on Bitcoin. Let's go ahead and add this to our analysis or just watching what's going on in front of us. We were talking last night about whether or not we possibly are entering a lengthening cycle on Bitcoin or not. I'm watching out for it. I don't think we are. Someone asked in the comments, well, if we are, you know, when is Bitcoin expected to peak out in its bull cycle? I will pull up a chart. I won't pull up a chart right now. I have a chart that I could go over with you probably next week when I get back to the office. And it basically shows in February of 2022. February 2022 is when Bitcoin should break out to new all-time highs, and a year later is when it peaks. I don't think that's what we're experiencing, and the main reason I don't think that's what we're experiencing would be because then the cycle afterwards, remember, Bitcoin trades in a 4-year halving cycle. If the lengthening cycle theory was true, that would mean in the next halving, the halving occurs in 2024, that the peak of that cycle wouldn't be happening until 4 years after the halving. And from my understanding, from what I believe, you know, and again, I'm open to it. If it turns out that we are entering a lengthening cycle, we're going to know pretty soon. right? And then we'll be able to adjust accordingly. I don't need to be right. I just want to know what's correct. The reason I'm going on about that is because I believe that the 4-year halving cycle causes the boom phase and the bust phase. And we have both of those phases within that 4 years. I don't think that we would enter a period where we would pass 4 years without going into the bull phase. And then after a halving event, after the supply is cut in half, go into a bust phase. It doesn't add up for me. It doesn't mean it's not correct. We'll keep watching it. We'll keep abreast of the situation. I'm just going to add in over this little trend line over here, because a break out of that might send our breakout. That might send us back towards 11,450 and possibly the next leg up. On the downside, it's watching this trend line over here. It's watching below this trend line. That would set off the failure and the next leg down. That could take us down towards 94.50 and possibly even towards 8,800. Again, if you're looking to pick up at those lower prices, make sure that you already have your orders in. I want to look at the Euro US Dollar as well, but before we do, you can see that right here in real time, this trigger here of the signal on the S&P 500. Question is, where do you put your stop loss? What are you targeting if you get into this trade, right? Now, if this trade triggers over here, I think the next area that we're looking at is going to be, I think it's going to be over here, targeting this trend line right over there. I'll make it darker and extend it if we get the breakout. That's where I would be targeting into this little bit, or not over there, up here, right in this area over here. All right, and the reason I'm figuring that out over here is to see where you would put your stop loss. And when I say targeting over there, that, yeah, I think that's a good target over there. Do you go with a tight stop loss, right below the bar, that trigger bar, or are you going where this is a failed for sure below this support over here? This is a failed descending wedge breakout over there. This is about a 1. The risk reward, if you were use the longer stop, is about a 1 to 1.5, which is still favorable. In this case, though, I would be going with the shorter stop loss. If we reverse over here and trade below the overnight low, I think that there's a good chance that maybe not we don't fail totally, but we'll come back down and we'll be testing down over here, at least towards this area over here again, and much easier than on a resumption up to get reestablished. I would be going with the tighter stop loss over here. We have tomorrow a big news event. We have the ISM manufacturing, and then Friday. How focused in the market's going to be on these things? Well, I don't know. Is it odd that we have a huge beat here today on Chicago manufacturing, and the dollar's trading off on that? I mean, again, this is why instead of trying to figure out what the data print will be and what you expect will happen, the biggest clues you could get from the market is always what is the data print, and then following what happens. Those are strong signals over there. That's it. I have to keep this short this morning. This is only a 10-15 minute check-in, and if there's really not much going on in the markets is why at this point, and because it is what it is. I have to get this sorted out so that we have the ability to go ahead and do our analysis. Now, before I get off, I'm going to go ahead. I got a lag over here, so I'm going to make sure, see if there's any questions that we're going to go over, and then after there, I will we'll take it from there. So there's going to be a little bit of dead silence for about 20 seconds. Anytime I'm seeing your comment that everything is balanced on a razor edge, we are at a huge inflection point, and it's been building though for a while. It's been built. So let's just look at that for 1 second. You can see here on the Nasdaq, you see this big consolidation over here. That means we're getting ready for a big move, and it could be up or down. It makes sense. When I say makes sense, I mean, we got a huge risk event ahead of us with the election. It reminds me of over here on the DXY, by the way. It reminds me of this big consolidation over here, right? We had this huge consolidation, and that led to a massive move down on the dollar. The move happened to be down. It could have went either way. So we are seeing, that's on the Nasdaq. We're seeing that big consolidation phase. If we look at the S&P, we just had this massive descending wedge. All right. So that could be, that as it's extending up here, could be leading to a massive move to the upside. If this fails, if it's a failed breakout, right, again, that could also lead to a massive move on the downside. So when I look at the dollar, we've been stuck right now in this area. When I say stuck, right, because price has not really gone too far. If you look going back all the way to the end of July, now that we're getting into October, price hasn't moved. Okay, so what is that? That's a tough trading environment. We've done our best not to get, you know, caught off on either side of it, but there has been no resolution. It's not easy to trade whatsoever. Gold, I mean, my inkling, my guess here is that this was, and this is a guess, that's why I'm waiting for confirmation on the chart. This has a great chance of being a fake breakdown over here, right? What about, that's why I always said from the beginning I wasn't going to sell it, because it could shoot right back up. On silver, possibly also up, right? On silver, possibly also right over there. Now, I gave the two levels that if we lose the support over here, then no, we're going to see a further extension down. Thanks, Alan. Glad to do it. That's for sure. Eco Beast. Yeah, Eddie. I'll be back on Saturday. On Saturday we'll be back, and then you know, Monday will be our normal regular schedule where we'll have to be working with clarity for sure, as far as having, you know, the nice mic, working with a good system. Be back on Monday, but nevertheless, I'll be definitely updating everyone later this afternoon after the session closes. And then tomorrow, I mean, crossing my fingers, I don't have to Zoom, and we got a better, or maybe I'm Zooming, but with a good internet connection. Thanks, Gene. I didn't see that. Let me see that. This is on, Tony, I'm not sure if you're talking about here on the, how do I do that? I just double clicked on the prime trend line over here. If I go to settings, right? Tony, where do I find the coordinates of the trend line to share? I'd be happy to do that, but I don't see how to share that. So best if you could shoot me an email and let me know. I'm just catching up over here on the comments. Thank you, Tony. John, Eddie. All right, everybody. There we go. All right, everyone. I will definitely be catching up later this afternoon. If the Bitcoin cycle is extended, are you still having the same price goal? I wish I could bring up the chart right now to talk about it with you all. Maybe I could do that. It would take a bit of a second here, but let me go ahead and try and do this. Let me send this from my phone over here. And then it's got to, I guess, change the sharing screen. There we go. All right. And then let me see this. Boom, boom, boom. Let's see. New share. Then there we go. All right, I'm just going to wait until that's up. Click trend line settings and then coordinates. Hold on 1 second. Let me finish with this. I don't know if I got the screen up, so I'm just waiting for buying that time for 1 second, and then I'll get into this really quick. So just hold on 1 more second. Yeah, there we go. Okay, so what we're looking at over here is you can see this is the chart of the lengthening cycle theory, and you can see over here that this is the first cycle, the second cycle was longer, and this is the projected third cycle. Now, I don't know whose work this is. This was shared with me by Dr. Loco 6 weeks ago, a month ago on Twitter. I'm just going off this chart over here. This is not a research example. This is me hanging out with you, just sharing what an example would look like. So you could see in the first cycle, right? You take the top over there and you have more or less a horizontal line. It's slightly sloping down. And then that's where price, after it broke out, the bullish phase started. This lasted 1 year. The upper extension lasted 1 year. Then you take the high again, you have that same slightly downwards horizontal sloping line. It's horizontal, but it's slightly sloping down, right? And then after the break, again, it was 1 year to the height of the market. So then if you have that same exact slope of that line extended out, you could see that the break does not occur until February of 2022, which means that 1 year later, because the bull cycle was 1 year on both the first and second, even with the lengthening cycles, it was still 1 year in duration, right? So you would assume that the bull market phase here would be ending in February of 2023. So the problem, not the problem, but what happens on the next cycle then, right? Because this cycle lasted from December of 2017, right? I mean, you kind of lose the halving of the minor reward, because this one is extended out, I guess we'll call it, to make it just easier on the math, 4 years, right? 4 years. So you would have a halving event right around here. I don't even know when that halving event is in 2024. Either which way, after the next cycle over here, this peaking out in this 2023, in February of 2023, more or less. What is the next? How long is the next consolidation phase here of the next lengthening cycle? Is it going on? This one was 3 years, and now this one's 4 years. Is the next one 5 years? You know, we start to lose the whole main factor of what causes the bull and the bear phase, which is the halving of the minor's reward. If that happens, and could it happen? It could happen. But what I think is going to happen, that this cycle that we're in right now, I think that it's going to probably be somewhere between these two in length. That's what I think is going to happen. Now, it doesn't mean it's gonna. Is it possible that a lengthening cycle is happening? Yes. And if it is, right, we're going to know pretty soon, because we're not going to break out here, right, in 2021. Well, I'm saying first quarter 2021 is when we really start breaking out. That's not going to happen if this is the case. If this is the case, though, if you have the 2021, the winter of 2021, right, when I'm expecting, I'm expecting that the height of the bull market right around November, December of 2021. This would put us still trading right under all-time highs, still under $20,000. Okay, it wouldn't be, and I don't know what the target here for this is. I'm not sure what the upside target they have on this. I'm assuming if you follow this around over here, this red band over here, that puts us somewhere around, I guess, $140,000. Not into 2023, a whole 2 years later than what I'm expecting. Interesting to look at, right? And we will know which is happening eventually. Now, I want to go back and check really quick what happens if I go ahead and hit that line and then go to settings, you said. So just double clicking on the trend line, coordinates. All right. So what am I doing? Saving this. I'll save that, and then I'll share that in the description of this video, that link for anyone who wants to go ahead and download that. There's also one on the Nasdaq though, right? Hold on one second. Let me just get the coordinates for this. All right, everyone. Have a beautiful day. And again, I'll talk to you in a little bit. This afternoon, I'll be updating as we figure out what's going on over here after this session's out of the way. And then we'll keep moving forward until we do get a breakout over here. But everything is consolidating, right? Everything is consolidating. It means a big move is coming. That's why it's so important that we remain on the right side of these trades. You don't want to ever get into a hope situation when all of a sudden you're having a huge expansion. All right, everyone. I'll talk to you later. Have a beautiful day.